The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 21st day of August. My pleasure to be here, noon till 1 o'clock Eastern Time, lunch hour. And thank you to our great hosts. Good capsulation of everything that's going on. Tommy Jr. there. Just at noon, we have these hourly updates. Let's go to the market. Dow's up 4 at 21,678. S&P's up 2 at 2427. Comp index is down 7 at 62. Let me just get this. I'd like to look at it. Comp index. Comp X. Yeah. So it's at 6209. You know, I'll talk about this in a moment because there was the only way I could count it. CD wasn't the only way I could count it. I knew there was something I hadn't updated. That's a D and that's an E. I thought there was a problem. Okay. Made a peak E in the daily and it's pulling back. So the daily's in a sell mode in the comp index. The weekly chart is at a sell signal, as I mentioned to my subscribers to my opening call over the weekend. Yeah, let's get on with it. Let's get on with this whole thing. So we've got the S&P. Now, let me go through this individually. The Dow. Down, what was down earlier on, hit the 21,600 level. 21,641 was the low on Friday. I'm calling this leg 3 down in the Chapman Wave 5, and it is a B down in the Chapman Wave methodology, trough B, a leg B to the downside. Having made a peak D, Chapman Wave 5 in the Dow at 22,179 on the 8th of August. And I've got this as a 5 and a D in the weekly chart. So this is going to be very interesting. When I say to subscribers, the daily is in a sell mode. The weekly, I'm putting in a down arrow. Technically, it needed to go under the 9-period moving average, but it met almost all the criteria for a sell signal. Calling it a sell signal, and because the MACD was declining and the stochastic is down at 82% after being in the 96 area, so this is really quite a big move down. Monthly is still positive. Now, what's going to be very interesting here is within the context of the markets. Look, we've got the Dow sell mode in the daily, sell signal in the weekly. But the reason why I decided that it was quite legitimate for me to put a down arrow was because the S&P had given a sell signal and sell mode in both the daily and the weeklies at Friday's close because of the very weak technicals. And that says to me, we've got time and maybe price, but so far we're looking at time. The big question is, at what point will we test at 2407 level, 0.70, that was the low of the 6th of July, and will it break? And that will set in motion the potential for the monthly chart to have a deeper pullback with 2368 as the 9-period exponential moving average key support. I don't want to go there yet. I'm just saying at this particular stage, the downside action is prevalent, and we've got to keep that in mind because the QQQs have already, in the daily, gone to a sell mode. The weekly is technically in a sell mode, but the price really held the 9-period moving average, but I decided that we're going to call it a sell mode. We've got unison action. It'll take a move in the Dow over 22,000 for me to really change my mind about the weekly charts. It'll take a move in the S&P of a comparable level, maybe 2470s, and then I'll have to say, oh no, this is fantastic action in a rebound, but it isn't at this particular point. And the IWM really set the stage, being in a sell mode in the daily and the weekly very clearly, and even the monthly has gone below the 9-period exponential moving average. But I did show this over the weekend to say that there was a left side, right side price time match that would come in. It came in exactly on Friday No, sorry. It can go all the way till Tuesday, but it came in on Friday going to 132.12, but it's really 130. Did I get that right? 134.20. Yeah, 134.23 was the low of the 18th of May. We went under that, not we. The IWM, the Russell 2000 went under it on Friday, and today was a little bit higher. So it's getting 134.12 to 134.14. Today's low. It's getting ready for a little bit of a bounce. It's under the 200 period exponential moving average. I would say between 135.50 and 136.60. That would be bounce material. No more than a bounce. That's all I'm thinking. Now let's go to gold. Gold right now is up $4 at $12.95. It made a peak E on that left side, right side price time mat. Just missed it. It was almost exact in time and price, but it just failed. That was on the 11th of August. It pulls back to the 9-period moving average, holds it, even though it kept trading down for 2 days, and then pops up to a slightly higher high. This is for F/B in the Chapman Wave notation, holding the 9-period exponential moving average really well. I think gold is ready for another little bit of a consolidation, but it's making higher highs and higher lows. To me, that's the sign of, at least in the daily chart, it's still a bull move. And in the weekly chart, it is an extremely good leg that went up on Friday. Because why? It went to that missing leg D. Chapman Wave C1, C2 in the weekly chart. Comes back down sharply from the 1305-ish area, pulls back to 12, what was that, 12.10, yep, 12.10 on the 14th of July, and now it's trading at 12.95. Very nice rebound, and that has really helped the monthly. Why? Because the monthly has just gone to a leg C. And now I can say to you, leg C in the monthly chart says gold is in play for the rest of the year. It could still consolidate further, and it could still come back all the way to the 1240, 1220 area. But as it stands, the monthly chart is starting to improve step by step. All right, let's look at silver. Silver had a slightly different pattern. It is now, this is very interesting. Everything about this is looking more like a leg B, maybe a peak B. Oh, we have someone from Cape Cod. Hi, Walter. How are you?
Good. How you doing?
I'm very well, thank you. So, my son is just arriving on the Cape right this minute as we're talking, and I hope to join him very soon. And whereabouts are you in the Cape?
I'm sitting on West Venice Beach right now.
Oh, man. I wish I could join you. I love Dennis. That's very nice. So you'd like to look at, what do we got? TJX, okay? So TJX, one of the really fine apparel companies. Oh, I had this so well notated, but I don't right now. Give me 1 second. Let me just do this. A, B, C, D, peak E in the monthly. Okay, now there are a couple of things that are going on. I'm first going to ask you, is this something that you're interested in? Or do you have it, or what are you looking at?
I've owned it for years, but I've sold some part of my position over the last year or so. A couple of different times. I got a little nervous. I didn't want to give it all back.
Okay, that's great. Let's talk about it. We'll be right back. Can you hold on?
Yeah, sure.
We'll be right back, and we're going to be back with Walter in Cape Cod. Basil Chapman, Tiger Conditions out.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. Basil Chapman. This is the Tiger Technicians Hour, and I did some of the other notation on TJ Maxx, but I just wanted to do the last major one in the monthly. Let me just see if I can finish the A. What we're doing the B, we're just putting in alphabetically uppercase wherever we can to, there we go. So that's an E, and that's going to be E/A, call that a B, a C, and a D. Okay, so TJ Maxx, one of the really fine companies, and I know this for a fact. I'd spoken, about a year and a half ago. I was speaking to one of the buyers, and she travels around the world, but she does it not for TJ Maxx, she does it for Home Goods. And really, if ever there was a popular brand, I mean, that Home Goods, whenever you go in, people are always just scroodling around there, and they invariably you find something that you didn't need, which is just exactly what you want. Right. So that's the kind of place it is. However, I don't think that they're impacted by Amazon in the same way. This is really, for Home Goods, it's really a matter of the idea is to be there and to see something that you wouldn't have seen, different to when you are scrounging around at a flea market or something. This is, you go there specifically to find something either that you want, which you can't find elsewhere, or it is so unusual that this is just the kind of place that they'd have it. So Marshalls and TJ Maxx are different categories. Marshalls is probably one step, I think, I'm just guessing, a little bit lower than TJ Maxx, but they are the kind of the same thing. They buy the apparel, and they really go all over the world, all around the country, all over the world, and they just try to find buyouts or particular brands that are either not selling anymore, whatever it is. It's quite unique in its own way. However, I think the competition is beginning to show up elsewhere. But at the same time, if you look at the way the RTH, the retail index, is held, and the way the XRT, the other retail index, has really got smashed, you can see that it's very specific. Now, I'm not sure, Walter, what technical or fundamental reason did you have to start kind of lowering your number of shares in this particular instrument, which is TJX, because it made a peak E in the Chapman Wave back in the month of August a year ago at 83.64. Not a big deal, 15 points down in a year, but it is on its way down, and I would say that it's probably going to go lower, and the upside could be limited for a little while. But you really have, if you've held this for a very long time, you've not traded it, but you've placed your positioning strategically very, very well. What made you start to come out of it like this?
Well, I like I said, I had a big portion of my portfolio in that one company, and I read a few things, and I actually called Tom, and he suggested that I get rid of it. I got rid of part of it, and then again, a couple of months ago, it started having a little bit of problems, and the retail wasn't doing well. But
right.
Recently, it broke its 50-day average in a bullish manner, and I read something this morning that says it may be ready for a breakout, depending on a couple of different factors. So I had thought of maybe getting back in and looking for that little breakout.
So did you get completely out?
No, I'm not completely out.
Okay.
I half of what I did a little over a year ago.
Okay, fabulous. Okay, so what I'm thinking is this: I just because of the way you're talking about it, it's held the 200-period moving average in the weekly at 64.24. It's had a nice rebound. My impression over the weekend, I didn't have that much time to really explore all of it because I tried to get as many charts as I could out for my subscribers and positions that we have, etc. I didn't go into what I would normally do, is looking at the Walmarts, the Costcos, etc., because I believe that they've been very close to some kind of a bounce, and that the bounce, because of the severity of the decline, might have legs in sustaining the move at least for a little while, and I wasn't sure yet on how high it could go. So now you have, in terms of a long position to trade the bounce, which is what you kind of think it might be something you want to do, where would an entry be? And I'm going to suggest right here at 71.20, it needs to make leg D. But the fact that it had a little peak underneath the previous peak C that was made at 72.09 on the 8th of August, the way it's making this consolidation figure, the MACD is holding quite well. Stochastic is not very good. I would say that your risk now. Would you be prepared to place an order, but also put a stop in?
Okay, exactly.
Okay, so if you're putting in an order and you've already got a core position that you're holding long for now, I'm going to suggest that there's a move that could be made in TJX if by Wednesday's too early. I'd say by Thursday afternoon. I'm going to give it a little time. If TJX is held above $69.90, but in fact has gone first above $71.81, and then breaks out to leg D above 72.09, what I think you've got is a chance that if on a week from Tuesday, in other words, a week from tomorrow, if it's still holding above 72, there's a chance it could try for the 200-period moving average of about 74.07. So it could get to 73.50, 74.20, and then we have to restudy the chart to see, is it now building momentum to go higher, or is this it? Now it's about to roll over and start to go to lower lows. That's really the way I would do it. So you could start a position here at 71.21. If it takes out 72.09, I would add another very small position. Keep the core that you've just bought right now. Keep it as a core just for the shorter term. I would make a stop a little bit above your entry price, and you've guaranteed yourself at least a gain. And then the second position, I try to ride up and up and up. And then at some point, you're going to get out of that and then put a stop on the position you just got in at 71.22. I hope that's not complicated. But I'm really looking for a leg D in the daily chart which is going to give you a leg B in the weekly chart. And then we'll see, because I think that the retail has been hammered away, and now it's the season for buying. I was there just yesterday. I drove by it. Actually, I didn't go to TJ Maxx, but I was in one of the others. And I'm starting to see people come back for the school season and all that. So I think there's a chance that there could be a few weeks of upside move, and then we've got to be careful again. Does that fit with what you're looking at?
Exactly. Thank you.
Okay.
Appreciate
all
it.
right. Well, thank you so much for calling, and hope to join you on the Cape in about a week or so. Bye.
Very good. Thank you.
Thank you. Folks, now the Dow's up 20. Now, one of the things we were looking at this morning for my subscribers is that on Friday we had a Chapman Wave trend gauge reading, which said that within 2 sessions we should have a 9 to 11 point rally in the S&P, and then we might see another bit of a pullback. But that's kind of what I was expecting. So we actually have in the portfolio, we added some long positions on Friday, and we do have short positions. So we got a real mixed bag. We do short sector or indexes, and we are long some stocks. We'll be right back. Basil Chapman.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians Hour. Let's show you this 10-minute E-mini. I think that's a better one. Look, there's your leg C in the 10-minute. We had a peak D earlier on around about 7:30. There's a 10-minute September E-mini, and it pulls back, goes to the 24.15, 24.15.75 to be exact. Goes to peak A, peak B. It's in leg C right now. 200-period moving average should form some kind of a basis between 200-period moving average of 24.28 and 24.26. There should be some kind of a little bit of a just a little bit of resistance, and then I think it's going to go higher. Let's go to Mike in Ormond Beach. Mike, how are you?
I'm doing great, Basil. Hey, Basil, I agree. It looks like to me that the markets or the indices are going to do a bounce here. And I was wondering what you think about GE, if now would be a good time to go long GE.
So, I said to my subscribers this morning in my opening call, I said, what were my exact words? I said GE, that was number 5 on the list. Within 0.35 of a good bounce, no trade, but tempting. So that was at Friday's close of 24.55, and the low today was 24.32. I would say that's within about 35 cents. And now there's a nice candle. So this is what I'm going to recommend. I have no idea why I'm even saying this market-wise, but on a purely technical level, if I'm looking at GE, just for a bounce, and it could be a nice percentage, if ever there was an opportunity with a divergence in the 120-minute chart of the rising stochastic and the falling price, the MACD in the 120-minute chart is just starting to improve a little bit with the histogram. I'm going to say, because you're watching the market quite closely, and you would treat it as a trade, right? Because if it works out and you can hold it longer, that's fantastic. But you got to be prepared that GE is just a really weak stock. I think there are still a lot of people that are trying to get out of it. But my suspicion, this is just my suspicion based on the patterns that I'm looking at, is that I would not be surprised if GE has a bounce, and that bounce actually turns out to be perhaps more time than price. But it takes a little while before it comes back to hit break 24.32, today's low. That's kind of the way I'm looking at it. Weekly chart, the MACD is really poor. Stochastic's flat at 4%. But I see no reason why there can't be a bounce to the 25.70 level. That's a point and a quarter in the weekly chart, 9-period moving average. That, of course, implies that 24.99, the daily has to be pierced. And I think there's a chance. I do believe that most of the intense selling went kind of completed this morning, and that now we could have quite a few days of rallying. So I'm going to suggest right here, 24.55. If you want, you can put your stop in at 24.30, 2 cents below today's low. I think that's it. I think percentage-wise, you've got a greater percent chance of making a percentage gain on the upside, better than on the downside for the next at least 3 days. But if GE on Wednesday, maybe that's a little soon. I'm going to say at this time on Thursday, if GE is holding above 25.12, I think that GE has a chance to continue rallying into the following week towards the end of the month. And that, just as a percentage basis, that's all. Now, what we're doing is we're looking at a chart that has just, if you look at the monthly chart has that arch formation. It just cascaded down. It hasn't broken above the 9-period moving average since it broke down back in January of this year. That turns out to be almost the same story. If you're looking at the weekly chart, it has the same pattern, except in this case, because it's a shorter term, it's just the weekly. When it broke down on the 20th of January, that started the cascade there. But that actually goes back a little further. So here's what I'm looking at. You could start a position. I usually say start a small position. I'm just going to say, you know what? It doesn't matter what the position is in terms of size, because you're going to put in a really tight stop of, 32? You can make
30.
Yeah, something like that. So you've got 1% stop or something like that, I think is a pretty good risk. But the reason why I'm not telling you you'll know what you want to do. I'm just saying, I'm not going to say small or big or a half position or a full position. I'm just saying you could go right in now at 24.55 with that kind of a stop. You will know by tomorrow morning, if not later today, that it's completely wrong because it's going to close below 24.40 at this particular point if it's ugly. If this, in fact, is a turnaround day for GE, and I think possibly a little bit for the market, you could have a very nice percentage gain, and that's really what I would be playing right now. So I'm saying yes. I thought about it this morning. I was going to do it for subscribers, and then I thought, we have got a lot of positions. I don't have to overdo any positions. We'll follow it. I'll keep treating it as my benchmark indicator. I do like it, only for a bounce, but the chances are that if, let's just say, the best case scenario, it doesn't come back to the 24, even 24.40 level, and the next thing we know is trading at 24.89, and then it goes to 24.97, and out of the blue by Thursday, let's just say it's trading at 25.20. What will happen at that particular point, your weekly chart suddenly improves, and that's the reason why I think risk-reward, I'm not sure if it can do that because the market to me is still very suspect, but GE, in a sense, it's deserving to have its own independence right now, and that could mean that regardless of what the market does, GE might have a bit of a bounce. So yes, I'm going to say I'm with you.
Okay. Well, thank you very much, Basil.
Great, and let's see how it does, and give me a call in a few days if you are going to buy it. Let's see how it does in a few days.
Okay, great, thanks.
Thank you very much, Mike. Mike in Ormond Beach, Florida, and we are looking at GE. Who would have thought, huh? But it's not that it's looking great. It's just looking like it's got the pattern that says had a right side failure. The MACD is turning down. Stochastic is holding better than it was before. Before it was back in June when it was much higher at 1585. Sorry, 2585. And now it's down in the 24s. So let's see what it does. All right. Now what we wanted to do is I've got a bunch of questions. KRE was the question. Well, let's just do the XLF because I was asked about the XLF. XLF, there it is. XLF trading at 24.56, and it's down 6 cents. Yeah, we've actually started a position in the XLF only because we've had it as a buy at that level on Friday. For a long time, I wanted to be very strict because I didn't see anything that said not to do it. Why? Because I thought if it hit the number we were in, it could bounce, and I have to just treat it as a bounce at this time because the weekly is still very weak, and it had made the peak F at 25.59. But I'm just thinking that fund managers are going to be looking for areas that have held quite well, and many of the banks have held quite well, and they're going to be looking to. That's kind of my thinking here. So the KRE, which is the regional banks. The regional bank SPDR S&P ETF, nice move, a green candle on Friday, even though it was lower. But now what we're looking at is it's at 51.65, down 4 cents. It has not I've not liked this particular. We tried it and we took a small loss. I said, you know what? I don't want this. Let's see. The XLF is holding better, so I'm still going to say KRE needs work. I'm not yet wanting to be long the KRE. That's a little weird. Be long one and not long the other. But these are chart patterns we're looking at. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, everyone. Let's just finish that. Look at the different indices, etc. This has got the TLT. This is my triple yield chart. I showed my subscribers every weekend to say the arch has returned. Look at that. Coming back down. 30-year is down 4 cents at 27.73. The 10-year, the brown TNX is trading down 0.05 at 21.89. And the cyan one is trading at 17.54, down 8 cents. And look at the squeeze. These two are close together. This one's a little further away. But my suggestion is just to wait, because if the arch says you're going to take out the low, say in the 30-year, 26.82, wow. Then you should see the home builders moving higher. But look, the weekly chart of the Philadelphia Housing Sector Index is not good. Peak G, right there. Peak D in wood, WOOD, the iShares Global Timber and Forestry ETF. But what is really good is that the crude oil just this is the chart we're looking at, down 84 cents at 47.81, made a peak C1, C2 at the 200-period exponential moving average. Just no, chop, chop, chop. I think oil's a problem child, and we've got problem child. Where did I get that from? Anyway, it is a problem. And you've got, I did gold. I wanted to do the HG, which is the copper. Copper is in leg F, right on the trend line resistance. So having gone this high is very impressive. Having gone this high in the weekly chart in leg D, after, just think about this. This is high-grade copper. It hasn't made a peak since the breakout of the 9-period moving average on the 14th week of the 14th of July. That's 1, 2, 3, 4, 5. 5 to 6 weeks of continuous highs, higher highs. Very impressive. The monthly chart has tested the left side high of 3.0235 today. We went to a high of, what is the high? 3.0025. Isn't that impressive? Oh, man. 3.0025. I got to use all these numbers. 3.0025. So it hasn't quite broken out above. Oh, wait. I just did the same thing. The high of May of 2015 was $3.0235. Today's high is 3.0025. So it's just a fraction under. It's almost like a little double top you've got there. Let's see what happens. This is a little topping phase because of the left side high way back in 2015. Does it remember? I don't know if it does, but some fund managers definitely do. We'll see what happens. Okay, so I've done everything. I've done crude oil. I've done that. The TLT We've done the yield, so we'll do the TLT in leg E, probably a peak E, but I'm watching it real closely because the MACD is good, stochastic's good. So bonds have held very well. The TLT is up 10 cents at 126.72. There is a left side, right side component to it. Now we've used up time, so now we're going to have to go to this low right here. So we'll do it step by step. Step by step means that now we can move that to the right, and we're going to take it all the way to there. And that gives you a left side, right side to this low right here by tomorrow. By tomorrow, it's got to get into this, at least this candle right here of 127.49. I'm not sure it can, but 127.49. The high today is 126.80. 126.80. No, the high on Friday was 127.15. So we're getting very close. All right. So TLT bonds are rallying and yields are coming down. Question I had. Now let's do this. Let's go. Goldman Sachs, usual culprits. We got here. Failed. It's coming back down. It is about to test the 200 period exponential moving average support. It was not stock specific when I looked at the XLF. It's really as a group because some of them are holding very nicely. Let's look at Bank of America. Worse than Goldman Sachs. It broke its Friday low, coming down quite sharply. JP Morgan, that was funny because I remember who I heard it was an option guy, and he was saying the easy trade, the no thinking trade is for JP Morgan to go to 100. Oh, I'm almost sure that's what I heard him say. I thought JP Morgan. It was at 94, 90 in the 94s, I think, at the time. Well, it went to 95.22. Now it's trading at 90.56. I don't think it's an easy trade at all. I think that it's consolidating, and that's the thing about the XLF because it has Visa. Look at that. I don't know if that's a breakout leg F or a brand new leg A, but it's an E in the weekly chart. Nothing technically wrong with the MACD and stochastic. So you've got a lot of independence here because you've got MasterCard trading, same thing. Made a peak E maybe, but if it goes to new high, I have to consider that's probably going to be a new leg C to the upside in the day. And what about American Express? Very quietly, American Express has just zipped along, had a big spike to the upside. It went A, B, C, D. Oh, it made it peak D. And that peak D has had a pretty sharp pullback, but it was a very sharp spike. No island reversals. It goes above the trend line. Chapman Wave. There we go. Chapman Wave inside track repellent zone pops above it. Can't hold it. Breaks down. And now it's at 85 after having hit the 87s. So I'm looking at this and I'm thinking, okay, peak F in the weekly. I've got to be watching this very closely. I might decide that maybe we won't hold the XLF. So a question P wants to know, is the ESU daily high in? No, I think there's a chance for one more little pop up. I'd be surprised if we don't go to a leg D above 24.79.50. But I think that a pop has to, the question is, the question I think implies, is this the rally bounce and now we're going to go back to lower lows? No, I think that this is going to last a little bit longer just to get that VIX lower. The VIX right now is at 1328. I think it might have to go to the 1250s or even low 12s, and then boom, it starts up again. So let's just say that when is the earliest we hit F in the monthly on major indices? Okay, good question. So we've done some of the financials. That was part of what I was asked about. Let me just do this quickly. XLE, and then we can go to monthly charts. XLE right now, trading towards the low end after making a peak E top in the Chapman Wave daily. Just continuous downside moves in there. I don't see anything that is select energy. I think it's just a fool's game to be trying to play rallies there. I just think there's too much. There's a glut. Nike was the next question I had. Who's that? Bob mentioned about Nike. Yep, gap down on Friday, lower today. Nike, I think, you remember I spoke about Nike way back in December of 2015. I said at 68.19, I would not be surprised if we're making a leg F and that we're going to see a hat trick top. And we've had 2 years now of consolidating. I think that whole area is vulnerable very vulnerable. I would prefer in the market not to be in vulnerable areas on the long side. I'm trying to talk one of my positions into holding, and that's the XLF. We'll see about that. So far, we're making some money, but that's neither here nor there, as they say. So Nike is just in an area I would be looking more to the short side every time it rallies than the long side. FL is Foot Locker. There you are. There's your example. It is tough out there in some of those areas. Really, look at that monthly chart below the 200-period moving average. Basil Chapman, Tiger Technicians Hour. We'll be right back. Dow's up 10, S&P's up 2.5.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, everyone. Let's go straight to dinner in Clearwater. Hi, how are you?
Doing well, Basil. You know it's hard to trade with these Eclipse sunglasses on.
Oh, wait a minute. Don't you have backlighting on your computer?
Not that much. No. I wanted to call, first off, good morning or good afternoon.
Good morning.
But I just wanted to ask about IBB. I have a position in IBB, bought in at a short position at 316. And so I've made some decent profits on it. But I'm sitting here looking at it. When I bought it originally, I was looking at it going down to really the trend line on the bottom. And we're basically there. And so I'm looking at it, though, but I'm looking at the technicals, the MACD, the stochastics. They all look terrible. So I'm just curious as what your opinion is on that.
So what I'm really looking for, I don't know if this is peak D in the wave 5 in the wave 4 in the Chapman Wave monthly chart, and that this is the move that goes down to the 240, 220 area. So I'm just going to go step by step. So we are short via a different instrument, the IBB. But what's really important about this is that it's a stair-step move. Even though you're looking at it under the 9-period exponential moving average, it tends to have really good rebounds to that 9-period moving average. So I'm expecting that it's not going to be an easy ride. So if you're looking at this in terms of shorter-term trading, today I would call a swing session in the sense that if you've got money that you've made and you have enough on the table, you could take off something now and say it's better than getting out and then trying to get back in, because it moves so quickly both ways, up and down, that I'm just going to say, this is a great time, maybe take something off and then dedicate that to putting it back in between 307.50 and 309.20, and then you'll put that back again. Now you might not get that you might not get that opportunity. That's why I'm saying just take a little bit off. Now, that's the end of the show. I'm just going to say that's the best that I could say right now. Otherwise, you're going to have to really, if you miss the next opportunity, it could be a quick drop down to the 200-period moving average. My target is 297s over the next week and a half.
I'll try to maintain a core position. Thank you.
Okay, thank you for calling. Folks, Basil Chapman, Tiger Technicians out, closing out. Hope to see you again tomorrow. Have a great trading day.
Hi, folks. The 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.